Yo, what is up, guys? It is Dan from Bro Gets Rich, and we are back for a 1 month in follow-up to me investing $25 a day in dividend growth ETFs on Robinhood. So, interesting note to start off. You can see, technically it's been about 5 weeks from when I took these screenshots, so just a little bit over a month. But after 1 month, I already have $757.40, which, an interesting note, I think the statistic was that 60% of Americans can't afford like a $500 or $600 emergency expense. So after just 1 month, or technically 5 weeks of investing in these dividend growth ETFs, I now have more in this account than most Americans have in their so-called emergency fund. So take that however you want it, but that's the truth. So let's get into my portfolio review after 1 month. All right, so $757.40 is my balance. My number one stock making up 83.74% of this portfolio right now is SCHD, the Schwab US Dividend Equity ETF. So this one, as you can see, this is the year chart, and we are at a pretty good buying point. I think the high was around $80. My yield on cost, so my average cost right now is $71.11, and my yield on cost for the dividend is $3.68%. I believe SCHD pays a $2.60 annual dividend. So market value right now is $634.80, and I'm sitting over just 9 shares. So in this account, SCHD is definitely going to be my main focus for quite some time. Just a really super high quality dividend ETF that has been growing the dividend consistently, good compound annual growth rate. Obviously, this year's been a weird year for the markets, but I'm still going to continue to dollar cost average into SCHD for probably a few years into this account. All right, the second stock I'm holding is JEPI, the JP Morgan Equity Premium Income ETF. So they are writing covered calls and giving you some of the premiums. 16.26% of this account and $123 and some change of market value right now. And I believe, I can't remember what the yield is right now, but the dividend yield is somewhere around like 9 or 10% annualized, and it pays monthly, which is really good mentally when you are starting in dividends because you're not going to make a bunch in dividends for quite some time. That is kind of like the depressing thing about dividends, is if you stay with it and stay consistent, it will pay you a lot over time if you're investing in quality and you're holding for the long term. But it's a slow process, so I'm trying to keep JEPI around 20%, but SCHD has just been going down, and overall SCHD is going to provide better all-around returns over time. But it's definitely nice to get that monthly income in JEPI, and I really do like JEPI. It's a very popular kind of high-yield dividend stock right now. All right, since my last video, I actually did receive some dividends, so I created this spreadsheet to kind of track these dividends in this portfolio. So this is what we're talking about with the dividend yield or the dividend snowball taking quite some time. You can see I actually got $1.11 from SCHD late September, and then early October I got 33 cents from JEPI. But you'll also see, right, as I invest $25 a day, yeah, like that's a good little bit of money for a normal person, $25 a day in a dividend portfolio. So as you can see, these totals over the next few months, they're going to go up, and they're going to go up, comparatively like pretty fast. And especially JEPI, if I'm putting in, 20% of $500 a month, that's, $100. If it has a 9% yield, that's, probably like an extra almost $1 a month. So that's kind of the plan for this. What am I doing with the dividends? I think Robinhood added a drip feature or a dividend reinvestment plan, but I don't think I'm going to turn that on at the moment. I might for SCHD, and then for JEPI, I'm probably just going to reinvest everything in SCHD because, like I said, over time that will the dividend yield will grow, and in 20 years it'll probably yield more than JEPI for me anyway, and it's going to have a better total return. So that's what I'm going to do with these dividends as of right now. All right, so besides going over portfolio, what I'm buying, stuff like that, I kind of want to share some stuff, whether it's like books or just kind of inspirational stuff. I'm spend a lot of my time on Twitter or X, although I have a hard time calling it X. But so anyway, we're just going to go through some tweets that I found interesting, some pertaining to life, some pertaining to health, some pertaining to obviously finance. So Ross Gerber, very fun hedge fund manager that I like to follow. tweeted this, some true words from Schwarzenegger. Anybody that tries to baby themselves and pamper themselves and protect themselves, oh, I don't want to feel bad, oh, I don't want to go through any discomfort, it's over. You're never going to get there. It's just the way it is. You have to be able to struggle. And not only in investing, but like in life, in business, in entrepreneurship, it's all of it is a struggle, right? Like investing's been a struggle right now. I just started this portfolio. SCHD has been going down. Tesla is my biggest individual stock position. It was almost at $300. Well, it was at like 203 today. It's a struggle. Business is a struggle, like I said. Fitness, health, like everything's a struggle. So Schwarzenegger, I don't know how old he is, like 80, still spitting truth. But yeah, you have to embrace the struggle. So great tweet from Ross Gerber. So also talking about Tesla, this is a really cool visual. I think like Tesla's the number one retail stock. So if you're watching this video and you're investing in the stock market, chances are that you maybe invest in Tesla or you at least follow Tesla. So they opened their 2000th open and active supercharger location in the US. This is a little map of all of the superchargers. And if you follow Tesla, or if you don't, most all of the big automakers have adopted the Tesla charging standard for EVs. So Tesla's energy sector and supercharger sector is just absolutely crushing it and is another major advantage of Tesla. So getting into Bitcoin news, if you follow my channel, you know I am a big Bitcoin fan. Mike Alfred tweeted, BlackRock, Fidelity, Invesco, and other major spot Bitcoin ETF issuers are probably going to need several million Bitcoin to satisfy consumer demand over the next 24 months. Where are they going to find that much physical BTC without driving the price to 200,000 plus? So chances are, if you follow finance, if you follow the markets, you've seen Bitcoin went on an absolute tear for like a day or two, and it was about 28,000. Now it's sitting around, I think, 34 at the time I write this video, which is really interesting, because as Tesla falls and as dividend stocks kind of go down, my Google position took a big hit, but now Bitcoin's ripping. So it's funny just like having exposure to different things. I'm down a lot in some things, but I made, quite a bit of money in Bitcoin. I mean, I didn't sell. I'm not going to sell, but just funny how those paper swings work. And getting to these ETFs, so they're going to need to like pre-fund these ETFs. Like they're going to need to hold physical Bitcoin to back consumer demand. And supply on exchanges is at an all-time low. So could be big fireworks for Bitcoin. Not financial advice, of course, but keep your eyes peeled and do not sleep on paying attention to the Bitcoin market over the next year or two. Speaking of the Bitcoin market, digital asset news. I think this guy's name is Rob. I used to watch his channel a lot when I was kind of just getting into crypto. He does a great job of kind of just covering overall news, but this is basically how you felt if you were a Bitcoiner over the last week, just getting high on these fat green candles. Then we have a tweet from Will Clemente, who gained most of his following through, he was like a young kid working at Target, and then he became one of the top on-chain Bitcoin analysts. Anyway, he says that he just read that 33% of US TikTok users say they regularly get their news from the app. While the rise of citizen journalism is great, having people get their information from an app largely controlled by the CCP is pretty concerning. So that is just, if you follow finance, if you're on financial Twitter or TikTok or whatever, in today's world, like, just be careful, not to be political or anything like that, but like, just be careful. Not everything you see these days is true, whether it's financial, like especially financial. It's like, don't listen to, do your own research. Don't listen to people on Twitter. Don't listen to people shilling shit. And definitely don't get your news from TikTok. That is just a lesson we all need to be reminded of from time to time. But anyway, that's a video for today. So investing $25 a day in these dividend growth ETFs that I went over. Please let me know down in the comments what you are investing in right now. As always, not financial advice. Probably do another follow-up video to this in a month. And we should be in the four figures. So pretty crazy. Just shows you what $25 a day and some consistency in investing in good quality ETFs can get you. My name is Dan. I will see you next time. Peace.